What is going on, my friends, and welcome back to another video on the channel. Well, I'm under the belief that Bitcoin is getting ready to start its volatility again, which may include a massive correction towards the downside, especially in the next few days before we do look to possibly continue towards the upside. So with that said, I want to make sure that you are as prepared as possible for what Bitcoin is about to do, so we are starting right now. So looking at Bitcoin's price, what you can see is that its price has been consolidating ever since about March 18th to now, so almost 2 weeks or so, right under this $29,000 level. Now, obviously, yesterday we did get a little bit of excitement as its price did start to push its way up, but of course that was not able to maintain, and we did see that thing just get forced right back down into this little range in which we are in right now. Now, over the last few weeks, I've told you all that Bitcoin could be in, kind of positioning itself to see a strong breakout towards the upside. Let me give you a reason and an example as to why. Of course, we did have what I believe to be this left shoulder, head, and right shoulder forming to create this inverse head and shoulders. Now, this inverse head and shoulders has a breakout target sitting right between $39,000 and $42,000. And so if under the right circumstances we do get some momentum, we could see this little bear market rally or beginning of the bull market reach all the way up towards 40K before I believe we likely do cool down for what would I say probably be the rest of the year. Very similar to what we saw back here in somewhere around 2019 and 2020. Of course, what you can see here is that as we did start to get these, reversal indicators on the bottom, we put in what we can see as a Fibonacci retracement all the way back up towards that $786 before consolidating and then kicking off that bull market. And under these circumstances, if we were capable of reaching our inverse head and shoulders breakout zone, it would look exactly the same, right? We would get to the bottom of that 618 to 786 box, something like this, and then probably consolidate a bit, maybe even pull back before starting to kick off that bull market, I would assume somewhere in 2024. So this is well within the realm of possibility, but we have a few barriers and obstacles that we need to clear before we are capable of doing that. And the most important one is this zone between now $29,000 and $32,000 to the upside. Over the last few days, I've been pointing out the fact that we're starting to get reversal indicators flashing like crazy. What you can see here is we got this daily overbought signal flashing on the chart prime oscillator, which has a strong tendency to predict when we are approaching a pullback. Let me look at the last few times that we got these. We had one right here, we had one right here, and we had one right here. What you can see is that every time this thing starts to flash, we will usually go up, put in the, a little bit of a pullback, put in a higher high, and then pull back. And, see the strong capitulation or the strong pullback to the downside. Same thing here. Here, higher high, capitulation. Here, higher high, capitulation. They almost always look exactly the same. And so my concern at this given point is that we could be in a position that even if we get this break towards $30,000, that may be the big indicator that the stronger capitulation or the stronger pullback towards the downside is on the way. And if people start going crazy because we broke $30,000 and going long, that they're going to get liquidated the moment the price, starts to correct back towards the downside. Okay. So what I'm saying at this given point is that you need to be skeptical. You need to be skeptical all the way up until the point that we are finally capable of holding some support on $32,000. I mean, we're starting to get other things flashing that say that, listen, this thing might get ugly soon. What you can see is that we got this possible reversal down indicator flashing on our chart prime market oracle. This has a strong tendency of doing the same thing. We got it right here. Although we went up, we saw that stronger continuation back to the downside. Same thing here. Although we did continue up a little bit after, we got that continuation to the downside. And this is like an early indicator. That's what these things are, early indicators, early warning signs, and they are now flashing. We are extremely far away from this band, this market oracle band, and we will usually resort back towards it considering the fact that it's around $21,000 right now. That tells me, hey, we might see one more push towards $32,000, but until we clear it, we are in position to see this bigger pullback towards the downside, and you need to be prepared for it. So what I'm going to do and what I'm going to say at this given point is that we absolutely must see $32,000 broken to the upside and either holding some support above it or simply just get this pullback out the way before I'm going to be doing some extremely strong accumulation from this point forward. I am still under the belief, again, as I said, that we may reach $40,000, that this inverse head and shoulders may play out. And if we get a push towards $32,000, that opens up room for us to backtest this neckline on that pullback. As you can see, it would be a very similar size as what we saw back here. And so it would be okay with me. We go to 32, we come back test 24. 1.25, use that for that continuation to the upside. That would be fantastic. But unless we either do this or unless we get this holding above $32,000, I am being extremely skeptical that we're going to be able to maintain any type of upward momentum. And with all of these early warning signs flashing, I'm under the belief that we are going to see that pullback, because it is common for us to see pullbacks, especially in this zone. What we can do is we can use our Chart Prime Smart Money Concepts bundle and turn on our predictive ranges. We're sitting at that equilibrium. We're sitting at that blue line right here. And obviously speaking, that's going to be a massive point of resistance. And if we're capable of finally breaking that predictive range, what's the next one? Right here. $32,000, the same zone that we put in all this resistance in. And so even if we break up here, who's to say we don't retest equilibrium or even probably retest this bottom half? That is very possible. And so because of all of these things adding up to me and all of this confluence between our indicators and oscillators, I have no reason to believe that some type of pullback is not going to happen either right now or on this next pump towards the upside, and you need to be prepared for it. Now, do remember we are running a campaign with OneInch right now in which you can do all of your swaps and all of your accumulating without paying any gas fees and without the risk of being front run. You all know we've been talking about them for a few weeks. I said Fusion Mode is one of the most innovative aspects of crypto right now, and I believe that they're doing something that many other companies are going to take on themselves. As you can see here, you have the ability to go in on OneInch and use their Fusion Mode, and again, pay no gas fees for it, no transaction costs, and you have multiple options here to kind of go with that. Now, I personally use auto most of the time because I'm not doing short-term time frame trading, but I'm also not doing long-term time frame trading. So this is usually a 3-minute maximum, and they're going to give you a pretty solid range in which you can buy your crypto from. Okay. Now you can also use fair. Now I would say honestly only use the fair option if you're just doing like weekly accumulation. Now the fair option, what you can see is if we just go down here, the fair option will execute a trade with a slower speed, but at a better rate. So you're going to, even though it's going to take a little bit longer, you're going to save a little bit of money because you're going to get a better rate. And so it is something that if you're not really in a rush, it probably is a better idea for you because again, it can just save you a little bit of money. And if you are trading very, very fast short-term time frames, I would use the fast option. Although again, you're not going to get the best rates, you are going to be able to execute the fastest trades. And you need to make sure that whenever you are executing trades on shorter time frames, that you are getting in and getting out. I wouldn't really be sitting there allowing probably 5-6 minutes to go by, and the next thing you know, the rates change and you miss out on a trade just because of that. So I would definitely use the fast option on the shorter time frames. But again, guys, all of these swaps and all of these transactions are protected from being front run, and you also don't have to pay any gas fees. The basic breakdown of how this works, if we do go back up here, it's similar to a normal swap. You first enter the token amounts that you want to swap. This designates you as the maker. Once the order is placed, the resolvers or the takers complete to fill your order and also pay for any associated gas fees, so that gas fee gets associated to the takers themselves. And by the way, a resolver is any address that stakes OneInch tokens and is registered to fill OneInch network fusion orders. So obviously this is something you should not be missing out on. You should be doing. I do have a link in the description. Go check it out. Go check out Fusion Mode. And if you're doing basic swaps, especially on DEXs, use Fusion Mode. Save yourself some money and protect yourself from the risk of being front run. I absolutely believe that there's no point to not doing it. So definitely go check that out in the link in the description down below. But with that said, overall, guys, when it comes to Bitcoin, I do believe that we are in a position again in which we have to be skeptical and you have to be cautious. We are in a position, who knows, right? Maybe we start to see a situation very similar again to 2019 in which we start to see this little push back up towards the upside. Boom, we work our way up and then we end up capitulating or consolidating all the way back down to retest the bottom side of this channel before going into the bull market. That is not out of question here. So you definitely need to understand that as we have made a beautiful push to the upside, there's only so much room we can run while we are in the current market we're in right now. Bitcoin and crypto is not ready for a bull market yet, I don't believe. It's not ready to really kick off towards new all-time highs. It's just not that time yet. It's not that shift of the tide yet. And so as we get higher and higher and higher, understand that that pullback or that consolidation and that boringness gets closer and closer for what I believe could be the rest of the year. So right now, I'm still accumulating every single Wednesday and making sure that I'm doing my share of buying as much Bitcoin as I can at a very, very calm, steady pace. pace. Right now, if we get a pullback towards the downside and we see that sharp prime oscillators and indicators reset, fantastic. Then I'm going to start to accumulate a little bit more. Or if we break $32,000 and then back test and see a cool down, I'm going to accumulate even more. But I need to see those indicators reset. I need to see that cool down, because at this given point, we are extremely overbought and extremely at risk of pullback. So with that said, I will continue to update you as this does play out. And of course, all I do is ask you to just simply like this video so that many more people will see it, and subscribe to the channel if you want to see more. But with that said, that's going to be about it, and I will see you all next time. Peace.